Good evening and welcome back to our PINASimpleng Investments para sa ating OFWs or PISO webinar series. I am your host, Kara from the FirstMetroSec team. We are now on our 5th episode, but before we start tonight's discussion, I am encouraging our live viewers to participate in our Q&A segment later. This is definitely the time to pick the brain of our speaker for tonight about the topic, so please send in your questions for us to answer by using your webinar control panel and clicking on the question mark icon. Now, last time in our previous PISO episode with our product development head, Vanessa Galvez, we discussed about investing in blue chip companies and how to become a part owner of the biggest companies here in the Philippines. This time for our topic for tonight, we will be delving on another investment channel that you should know about, and that is on bonds and how you as an investor can earn from them. So without further ado, please welcome our speaker for tonight, our Product Development Officer here at FirstMetroSec, Harriette Gasacao.
Hi everyone, thanks for taking the time today to join us on our new PISO webinar. So today, we're going to talk about bonds and how do we earn from them. I'm Harriette from the FirstMetroSec OFW Desk team. So, what are bonds? Well, before we get into that, this is how the discussion will flow. We'll start with defining what are bonds, and then we'll compare bonds and stocks and examine the difference between them. And then sa dulo, we're going to discuss the different types of bonds. So, ano nga ba yung bonds? So, madaling sabi, bonds ay utang. So, pag ikaw ba, kailangan mo ng pera, saan ka nangungutang? Saan ka pupunta para mangutang? Sa family? Sa friends? Normally, tayo and companies, like Company A in this example, go to bank to get money. So, normally, pupunta tayo sa bangko, tapos doon tayo mangungutang. Pero, paano pag kailangan ng gobyerno ng pera? Paano kung sila naman yung nangangailangan ng funds? Saan sila uutang? Normally, yung mga funds na to is used to build roads, make railways, or make bridges. So, normally, infrastructure projects to ng government natin. So, saan sila pumupunta? Sometimes, they go to the international market and they borrow money from the supernatural entities like World Bank, Asian Development Bank, kung saan itong mga entities na to nagpapautang talaga for development of certain countries. So, our government has that option. Pero, aside from that, they actually have an option to borrow from the public via government funds. Yung bonds yung patunay na nanghiram yung government dun sa tao na yun. So, if you are a bondholder, then it is proof that the government owes you money. So, sino ba yung kumukuha ng mga bonds na to? So, pwedeng banks, nag-i-invest sila sa bonds, and may mga companies din na bumibili ng bonds for their own investment. And actually, a lot of people or the public would also buy government bonds. Let's discuss the parts of a bond. Ano ba yung bumubuo ng isang bond? Number one is principal. So, pag umutang ka, di ba, normally, may yung principal amount ng utang mo. Yun yung parang face value ng bond. Pero since utang siya, the important factor ng utang is interest or coupon. So, di ba, pag umutang tayo sa bangko, for example, home loan or car loan or even personal loan, automatic may kalakip yun na interest. So, parang isipin mo, ikaw yung bangko this time. Ikaw yung nagpautang dun sa bond issuer. Tapos, ang mangyayari, since nangutang sa'yo si bond issuer, as a bondholder, you are entitled to get interest payment per year. So, normally, pag sinasabi nila na, oh, it's a 5% bond, normally, yung 5% na yun, that is the interest that you're supposed to get every year. So, yung interest, normally paid siya quarterly or semi-annually, so that's twice a year. May mga bonds din na once a year lang siya babayad ng interest. Ang maturity date is the day when you will receive your principal back. Importante itong date na to kasi at this day, parang ma-fulfill na yung contract ng bond kung saan, tas at maturity date, that's when the bond issuer has to pay back the bondholder yung full principal amount na in-invest ni bondholder. For example, let's take PREMYO bonds as an example. Last year kasi, nag-issue yung government natin ng PREMYO bonds. Not sure heard of it, pero ito yung bonds kung saan every quarter may raffle. So, the maturity date niya is December 2020. So, 1 year lang yung tenor ng bond. Kasi December 2019 siya in-issue. Tapos, December 2020, you would expect to get the amount that you invested in 2019. For example, nag-invest ka ng 20,000. Since 3% per annum yung interest, you're supposed to get 600 pesos per year. Pero may tax na 20%, which is 120. So you are only gonna get 480. So you're supposed to get 480 net for the interest. So how does it work? Let's see. Noong December 2019, for example, nag-invest ka ng 20,000. So lumabas sa yung 20,000 and you get the bond, which is worth 20,000, the face value of the bond. On March 2020, on June and September, and even on December 2020, you're supposed to get 120 pesos interest. Ito na yung net na interest, net of tax, na interest that you're supposed to get. If you signed up with us, this should be part of your buying power. But if you got the PREMYO bonds via your bank or your investment house, you should be getting it on your bank account. Okay. So, on December 2020, at maturity date, you also should receive the 20,000 pesos on top of the interest payment na 120 pesos. So, that's how bonds work, diba? Okay. So, one important thing to note for bonds is yung relationship between interest rates and time. So, kapag mas matagal yung maturity ng bond, you should expect na yung interest rate or the coupon rate of the bond will also be higher. Why? Because longer maturity means more uncertainty. So, bakit ganun? Kasi, isipin mo, like 5 years from now, 10 years from now, syempre hindi ka na sure on what's gonna happen to you, kung diyan ka pa rin ba nakatira or diyan ka pa rin ba nag-work ka. So, the longer time na mas matagal yung tenor and maturity ng bond, mas mataas yung uncertainty. And more uncertainty means higher risk because risk is uncertainty. So, since hindi ka sure kung ano yung mangyayari, hindi ka rin kailangan ma-compensate ka for the risk that you're gonna take if you're gonna invest in a longer tenor bond. And of course, higher risk means higher return. Why? Because it's important na since you're taking on a higher risk, ma-compensate ka for a higher return. And higher return means higher interest rate. Because as we know, one of the major parts of a bond is the interest rate or the coupon rate of the bond. So since you are expecting a higher return, that means you are expected to have a higher interest rate for that bond na mas matagal yung tenor. So, ano nga ba yung dapat tandaan pag mag-invest tayo sa bond? Number 1, ito yung pinaka-importante, yung pwedeng hindi ka mabayaran na nag-issue ng bond. Why? Because it's utang. Kasi, di ba, utang yung bond. So, ano ba yung pinaka-risk mo pag may nangutang sa'yo, hindi ka mabayaran? So, ganun din sa bond. Pwedeng yung bond issuer, hindi ka niya mabayaran kasi nga, for example, may liquidity problem siya, or na-bankrupt siya, or kasi something went wrong with the business, tapos hindi ka na niya mabayaran ng interest payments or ng principal mo. Number 2, bumaba yung market value. So, we have to remember that bonds are financial assets. And as a financial asset, meron siyang market value. So, may chance kasi na pwedeng bukas, yung market value ng bond, hindi na siya kasing with any type of financial asset. Pwede rin mag-fluctuate yung value ng bond. This is because yung value ng bond normally nade-derive siya from the prevailing interest rates in the market. So, pwedeng bukas, mag-move against you yung interest rate ng bond. If it moves against you, then bababa yung market value ng bond mo. However, one thing to note is if you are thinking of investing in a bond and holding it until maturity, you don't actually need to think about market value too much. Kasi since hawak mo naman siya forever, hindi mo kailangan isipin na, ay, ngayon mababa yung value niya. Kasi kahit na bumaba yung market value niya, you would still be getting the coupon rate or the interest rate. So, kahit na anong mangyari sa market, the bond issuer would still need to pay the interest rate to you. Lastly, pwede kasi siyang mahirap ibenta. Why? Unlike the stock market, wherein normally, di ba, if you need to buy or sell a particular stock, you just go into the market, key in your orders, and then wait for someone to hit your order. Sa bond market, medyo iba siya. Medyo mas mahirap magbenta kasi normally, yung mga bank, well, actually, banks lang yung may access dun sa market and other financial institutions, of course. So normally, sila lang yung may access dun sa market. And if you want to buy or sell a particular bond, you have to go through them. And minsan hindi siya ganun ka-liquid. So pwede kang mag-key-in ng order mo or magsabi ng order mo, pero may chance na hindi siya ma-hit or pwede mo siya mabenta pero at a really bad price. So since na-define na natin yung bonds, why don't we compare it versus stocks? Ano ba yung difference nila? Okay, so we can look at it from the risk-return relationship graph. So you have to remember high risk, high return. Because nga, uncertainty is risk, and higher risk means a need for higher return. Why don't we look at the first thing here? Makikita natin na savings account, time deposit, and money market instruments are low risk and low return. Kaya, di ba, sobrang baba rin ng interest rate for example, yung savings account natin, sobrang baba na interest rate, less than 1% ata yun per year. Now, on the other end of the spectrum, we can actually see that stocks are classified as high risk pero high return. Why? Because sobrang galaw ng market ng stocks. You don't know what's gonna happen tomorrow. And yung, for example, today, nag-invest ka in a particular company, tapos the next day, but you can lose 20% of your portfolio, and then the day after that, gain 30%. Bonds would be somewhere here in the middle. Why? Because once you invest in a bond, essentially, nilalock in mo yung principal mo with that bond issuer hanggang sa maturity date. Yung magagalaw yung pera mo, during that time, kailangan kang i-compensate ng bond issuer dun sa risk na tinitake mo. Risk and return go hand in hand. Remember that. Okay. So, ano ba yung difference ng stockholder sa bondholder? Ang stockholder is part owner of the company. So, since part owner sila ng company, everything that the company, all the gain of the company, meron silang right doon, di ba? Kasi on the other hand, yung bondholder, para siyang creditor. Siya yung nagpautang doon sa company. For a creditor, ang pinaka-important really is to check kung may enough money ba yung company to pay for the utang that they're getting. So, super important. You have to remember, ano ba yung objectives ko? Why am I investing? Kasi that would point you to the right direction into what type of investment asset you should be investing in. So, depending on your investment objective, you can go to bonds kung yung investment horizon mo is medium to long term. When you say medium to long term, that's siguro medium term is 3 to 5 years. Longer term is 5 to forever. Or like siguro 5 to 10 years, ganon. So that's the investment horizon that you should be looking at. For stocks, mas mahaba dapat yung investment horizon mo because when you look at past data, makita mo na pag mas matagal yung investment mo sa stock, mas solid yung return niya kasi habang tumatagal, tumataas yung value ng stock eh. Pero on the medium term, you're not sure on how the company will perform, di ba? So, yun. So, another difference is that bonds would give you regular interest payments. So, di ba nga, part ng bond is yung coupon rate or the interest payment that is given either quarterly or semi-annually or annually. So, this will not, the interest payments will not change kahit na magbago yung value ng bond or mag-iba yung interest rate sa market, okay lang yun kasi you would still be getting the interest payments that is part of the bond. However, for stocks, yung counterpart nito would be dividends, diba? Kasi normally, well, some companies give out dividends. If you were able to check out some of our earlier PISO webinars, this is discussed by Van. So, may mga companies talaga na maganda yung dividend payout nila to their stockholders. However, this is not guaranteed. And normally, this is something that is parang yearly siya in-approve ng board ng companies eh. So, for example, for a year like this year, wherein stocks are not performing so well, a lot of companies are in trouble, dividends may not, baka next year hindi sila mag-give out ng dividends. So, this is not guaranteed. Next is, for bonds, yung principal mo, completely protected. Why? Because kung bumili ka sa issue date, pagdating mo sa maturity date, you are supposed to get your principal back. And that is the beauty of bonds. You will always get your principal back at maturity date. So, unlike pag stock, pwede kasi ang mangyari is mag-invest ka ngayon ng, for example, sabihin natin 20,000. Tomorrow, pwede hindi na siya 20,000. So, pero on the flip side, pwede rin naman siyang tumaas, diba? So, high risk, high return. Pero yun nga, pero ganun nga yung difference nila na sa bonds, once you invest at issue date, you know that you would get that same amount on maturity date. So, protected yung principal mo. That is also a reason why bonds are less risky than stocks. So next, how do you earn? Syempre, super important. For stocks, you get dividends, as was mentioned earlier. However, these are not, pwedeng hindi siya consistent eh. So, and not guaranteed. And of course, price appreciation. Syempre, when you buy stock, you expect the price to go up, and then once it goes up, you can sell. So, pero both of these are not guaranteed by anyone. So, pwedeng this year walang dividends, or like for example, this year, diba bumaba yung price ng stock na hawak mo, so hindi mo naman siya mabenta. However, for bonds, it's really interest. And the interest payment, it's kind of protected because the amount is fixed. Diba? Because at inception, at issue date, naka-define na yun eh, kung magkano yung interest na makukuha mo for that particular bond. So now, we can move on to different types of bonds. So normally, bonds can be classified into two categories: government bonds and corporate bonds. Obviously, government bonds are government issued and guaranteed by the national government, while corporate bonds are company issued and guaranteed by that company na nag-issue ng bond. So yung government bonds kasi, they are considered risk-free bonds. Why? Because the government has, since this is something that the government has issued, meron siyang hindi babayaran ng gobyerno. So, once a bond comes due, you should expect your government to pay for it, the interest rate and the principal kapag at maturity date. So, meron kasi yung government natin, meron siyang ways and means to ensure na mababayaran niya lahat ng bond obligations niya to the public. So, really, actually, when you compute for bonds or for value of bonds, risk-free, ang ginagamit mo talaga na computation is the government bond kasi nga, it is considered risk-free. On the other hand, corporate bonds are not risk-free kasi nga, hindi naman sila government. Hindi sila, they don't have the power of the government to make sure that their debts are paid. However, since mas mataas yung risk niya than government bonds, that means you are compensated for it with higher interest rates. What do you mean by this? Check out this example. For example, for treasury bonds issued I think this was last year, and due for treasury bonds issued last year, I guess, June 2022, ang interest payments niya is, ang interest rate niya is 4.75. Compare it to RCBC's bond na 4.848% June 2022. So you see, since ang treasury bond is issued by the government, ibig sabihin, this is safer than RCBC's bond. That's why, mas mataas yung interest na binibigay ng RCBC sa bond investors niya. Another example is the treasury bill, 3.475%, which is BPI's corporate bond na 4.05%. Pareho sila June 2021. Pero you can see the difference between the two issuances. So, mas mataas talaga yung kailangan ibigay ng bondholders, ng bond issuers sa bondholders for similar issuance, similar tenor na government bond. And actually, if you look at it, medyo malaking investment yung bonds, no? Kasi a minimum investment is normally 100K for the typical government bonds. And tingnan mo to sa BPI, 1 million nga yung minimum investment niya sa bonds. However, the government wants this type of bond to be available to the retail market. Kasi nga, you know, this is safer than stock and would give you higher returns than your typical savings account or time deposit, diba? So they launched the retail treasury bond wherein the minimum investment is just 5,000 pesos. So what are RTBs? This is a low risk investment because government bonds are risk-free. This is affordable because yung minimum investment is only 5,000 pesos and increments of 5,000 pesos. So, pwede mong taasan yung investment mo for every 5K. And then, interest is paid quarterly. This interest payment is diretso siya sa bank account mo. So, you would have and automatic siya and quarterly payment, so okay din yun. Mas mabilis yung cash flow pupunta sa'yo, right? And lastly, it's convenient because early last year, the first RTB issuance for the year is actually online. So, pwede ka nang bumili ng RTBs during the issue date, during the offer period online. So, wait, before we go into the examples, so just to clarify, since bonds normally are para siyang meron siyang offer period eh. Kasi, di ba, I said that you can buy RTBs online. Pero you have to remember that bonds are normally would have an offer period. So, para siyang IPO wherein you can only buy the bonds at a particular window. Why? Because, kasi nga, most of the bonds actually in the market are treasury bonds issued by the government. Kailangan, meron kasi silang pina-follow na schedule funding schedule for the country, di ba? So, they have to make sure na mo-follow yung funding schedule na yun. So, kaya normally may window ka lang. 1 week lang siya or yung PREMYO bonds last year was 2 to 3 weeks if I'm not mistaken. So yun. So normally may period lang siya, and you have to make sure that you buy the bonds within that period. Okay. So ito yung mga examples ng RTVs. Last year in 2019, December 2019, may PREMYO bonds na issue at 3% coupon rate with a maturity of this year, December this year, with a minimum investment of 500 pesos. O diba, sobrang affordable niya. And ito yung bonds, PREMYO bonds na merong raffle na may raffle factor. So ayun. Tapos early this year, meron ding RTB issuance, the RTB 2020, which coupon rate is 4.375 with a maturity on 2023. Minimum investment is 5K. Now, actually, if you look at these two bonds, makikita mo na mas matagal yung maturity kasi since RTBs are issued and guaranteed by the government, on the risk return scale, parang pareho lang sila, di ba? Pero if you look at it, mas matagal yung maturity ni RTB 2023. And this RTB was actually issued, if I'm not mistaken, early Feb this year. And the PREMYO bonds was issued December. So parang two months? 2 months lang yung gap nila. Pero ang laki ng difference ng coupon rate. This is because iba yung maturity nila, dalawa. And syempre, nag-move na rin yung market interest rates. But, so yun. So you see na may difference yung like longer tenor and syempre different din yung time scale. Kaya iba yung coupon nila even though they are both issued by the government. Okay. So why would you invest in government bonds? As I've been saying, risk-free siya. Government bonds are considered risk-free because the government has ways to ensure na mababayaran niya lahat ng obligations niya once it comes due. And another reason to invest in government bonds is, you invest in nation building. As I mentioned earlier, bakit ba nangutang yung government? This is because they want to build infrastructure, they want to build bridges, roads, ganun, for the country. So the Build program, for example, of the government would be relying on a lot of government-issued bonds to ensure na ma-fund yung mga projects na yun. So, yeah. And you can actually invest in the primary issuance of online RTVs through FirstMetroSec. So if kung na-entice kayo to, start investing in our country, you can start by investing in online RTVs. And you can actually get it through, if you have an account with FirstMetroSec. But as I mentioned earlier, you have to remember that you only get the online RTV, you can only get the primary issuance of online RTVs in a specific period. So, meron lang window kung saan pwede kang bumili. And early this year, the issuance early this year, the window was 5 days. Pero they had to close it on the 3rd day kasi oversubscribed siya. Kasi nga, may funding schedule yung government natin eh. And typically, pag na-meet na nila yung requirement nila for a particular period, isa-stop nila yun kahit na for 5 days siya. So you have to make sure that once the online RTVs goes online, you just have to start buying kasi baka mamaya, if you wait until the last day, wala ka na mabili. So yun. And, okay, on the flip side, aside from primary issuances of RTVs, you can also invest in bond funds via FundSmart. So, ano ba yung difference ng bonds and bond funds? So, when you invest in bonds, you invest in the actual bond. You invest in the actual financial assets. So, you get the interest payments, you get your principal back upon maturity. However, ang difference with bond funds is yung bond funds, meron kang fund manager. We talked about UITFs and mutual funds in one of our PISO webinars. You might want to review that. It says that funds are managed by professional fund managers. So sila yung mag-i-invest in your behalf. And since fund siya, ang value niya, it depends on the net asset value per share or the NAV/PS. And if you invest in bonds, normally in bond funds, maglalagay ka ng pera sa bond funds. Tapos you wait for the NAV/PS to increase, and then you can redeem your subscription. So you don't actually get the interest payment, but investing in a bond fund would allow you to actually invest in bonds na hindi accessible sa'yo. Kasi diba, you saw earlier na medyo malaki yung kailangan mong capital in investing in bonds. But investing in bond funds, it would actually allow you to buy into those types of bonds na hindi mo kayang bilhin on your own. Kasi gagawin na yun in behalf of you by the fund manager. So that's something that you might want to consider doing. Also, bond funds, also, if you want to invest in bonds, di ba may window lang siya. So it's a one-time investment eh. So maghuhulog ka agad ng pera, one-time, big time siya. Pero if you want to do like, do something every month, ganun, pwede mo yung gawin via bond fund. So that's something that you might want to consider looking into. If you go into the website, you would actually see FundSmart on the upper right-hand side. That's the one below stock. So in there, you can actually filter out bond funds. So you can see the different types of bonds. And just make sure na before you invest, you check it thoroughly. I would suggest to click on the prospectus para lang alam mo kung anong types ng bonds yung in-investan ng bond funds na yun. So, yeah, kasi may iba't ibang types ng bonds, diba? As I mentioned, may corporate bonds, may government bonds. So, if you look at the prospectus, you would see kung ano yung strategy, investment strategy, and the investment objective ng fund manager. And if that's aligned to your own investment objective, that's the fund you should be investing in. Okay. Oh, if you're using Pro, on the upper left-hand side, yeah, the drop-down menu, instead of stocks, you can choose funds. So why invest in bonds? You have to remember the most important thing is it's appropriate to your risk profile. So you have to know what type of investor are you and what type of risk are you willing to take. Kasi yun nga, baka mamaya sobrang conservative mo or sobrang aggressive mo. If you're too aggressive, baka isipin mo, baba naman ang yield ko sa bonds na to, dapat nag-stock na lang ako, ganun. So if you are, or if you are like super conservative na you're scared of losing your money and you want to always have access to your money, then baka you go into the money market. So you have to make sure that you know what type of investor you are and that investing in bonds is fit with your risk profile. Why invest in bonds? Is to, because of guaranteed cash flow. Interest payments are regular, and before getting into a bond investment, you already know exactly how much or how much interest you're gonna get for every interest payment. And the payback of principal at maturity. So this is one of the most important feature of bonds. Your principal is safe. The amount that you would be investing at issue date would be the amount that you would get at your maturity date. So in that sense, protected yung principal mo. So of course, some people also invest in bonds because of capital gains. So some people would expect, like for example, just a typical financial asset, you buy something and then you wait for its value to go up and then you sell it to the market. However, I would not suggest that you do this unless you understand how the interest market works, because I would suggest that once you start investing in bonds, you invest in it until maturity. Kasi nga, sure ka na makuha mo yung principal mo once it becomes due, diba? And the interest payments are guaranteed. So, lastly, some of you might already be investing in the stock market. Bonds a good way to decrease the overall risk of your portfolio because this is essentially diversification. Why? Because the relationship between the stock and the bond market, since the bond market is essentially uh, less risky or safer, a safer investment than the stock market. Once the stock market goes down, nagiging strong actually yung bond market eh. So, pag bumababa yung value ng stocks, lalo na if it's a market, if the whole market is going down, you would see typically that the bond market is already going up. So, since ganun yung relationship nila, you are protecting yourself by investing in bonds. So, instead na sobrang taas ng risk ng bond mo, ibababa mo siya because you have bonds on your whole portfolio. Yeah, because it's better to not put all your eggs in one basket, even if it's a big basket, diba? As I said earlier, you can get the primary issuance of online RTVs if you have an account with FirstMetroSec. So, if you want to open an account, just make sure that you have your TIN number. This is a requirement, and we can't open an account if you don't have a TIN number. For your IDs, your passport, and your visa or OFW card will do. And then, number 3, proof of registered address. So, the address doesn't, kahit na hindi mo pangalan yun nandun sa registered address. And lastly, proof of bank account number. So, normally, it can be like a screenshot of your online account with the bank. You just blur out everything else. You just need to make sure na yung bank account na nilagay nyo dun sa form is your actual bank account number. To open an account, go to www.firstmetrosec.com.ph and then click on Open Account. And we have a promo. For every 10,000 pesos or $200 investment invested, you get 100 pesos investment credit. So this is a good opportunity to start building your investment portfolio.
So thank you for spending your Saturday night with me, Harriette, and the rest of the FirstMetroSec team here, despite this webinar happening on a weekend. We hope you were able to shed some light on the many ways you can actually earn money, diversify your investments, which can also eventually help you whatever stage you may be right now in your investing journey. To stay up to date with the latest events in the market, and other updates like FirstMetroSec exclusive e-learning sessions, simply like our page on Facebook, follow us on Instagram and Twitter, and subscribe to us on our YouTube channel with the handle at FirstMetroSec. And that's a wrap for tonight. Thank you again for being part of the 5th episode of our PISO webinar series. This has been Cara with tonight's guest speaker, Harriette, wishing you a happy weekend. We'll see you guys next time for more investment episodes like this one. Stay safe, stay healthy, and stay at home. As always, with First Metro Securities, it's hashtag your future first.